June inflation alert. Consumer prices rise again. Fed's next move. Financial headlines often flood us with numbers and technical terms, but at the heart of it, there's a story about rising prices and the Fed's delicate balancing act. And here's where it gets interesting. While the Federal Reserve keeps interest rates steady for now, recent data shows inflation nudging upward again, hinting at potential shifts ahead. But why does this matter? And what does it mean for everyday consumers? Let's unpack the latest inflation report, which is based on the Fed's favorite measure of consumer prices, the Personal Consumption Expenditures, PCE index. For June, this index has edged up slightly, with overall consumer prices increasing by 0.3% compared to May. And over the past year, there's been a 2.6%. Well, the Fed primarily aims to keep inflation around 2%. The recent uptick in both headline and core PCE suggests inflation is gaining some momentum, which complicates the Fed's efforts to bring prices back down. They're especially watching the core figure, as it's often seen as a more reliable indicator of persistent inflation. Excluding the swings in food and energy prices that can fluctuate wildly, prices for goods in June rose by 0.6% year over year. Durable goods, items meant to last for a long time, like appliances or electronics, increased by 0.9%. While non-durable goods such as food and clothing went up by 0.5%. Meanwhile, services prices jumped 3.5% compared to last year. Wages and salaries grew only slightly, by 0.1% in June, which marks the slowest monthly growth seen since late last year. Additionally, the personal savings rate held steady at 4.5% of disposable income. All of this comes at a time when the Fed has chosen to hold interest rates steady, their fifth consecutive meeting without a change, despite pressure from former President Trump and political debates about cutting rates. Federal Reserve Chair Jerome Powell expressed cautious optimism, emphasizing that the central bank is waiting to see how tariffs and other factors play out before making further moves. He pointed out that while tariffs are starting to influence prices, their overall impact on the economy and inflation remains uncertain. They could be a one-time shift or a sign of something more persistent. The upcoming Federal Reserve meeting is generating buzz, especially with President Trump celebrating the economy's 3% GDP growth rate and pushing for rate cuts. However, recent data suggests that the Fed might be hesitant, as the market has already shifted its expectations. The probability of a rate reduction in September has decreased, with traders now favoring the idea that rates will stay put for the foreseeable future. Experts like Oxford economics Michael Pierce note that while inflation related to services remains subdued, helped by slow housing costs, goods prices are climbing sharply. This underscores the possibility that tariffs are starting to ripple through to consumer prices, but the Fed remains cautious. As Powell indicated, rate cuts are unlikely until the Fed is confident that temporary price increases in goods won't lead to broader inflation waiting in the wings. So what does this all mean for you and me in the real world? Well, rising prices can chip away at purchasing power, and the Fed's careful approach suggests they're trying to avoid overheating the economy. Do you think the Fed should act sooner to curb inflation? Or is patience the better strategy? How might these inflation trends influence your own financial plans, savings, investments, or spending habits? Drop your thoughts below. This is a debate worth having. U.S. consumer spending rises in June despite higher inflation and tariffs. Consumer spending is on the rise, but so is inflation. In June, American consumers ramped up their spending, contributing significantly to the economy, even as they faced increasing prices due to tariffs that are becoming more noticeable both in physical stores and online. According to data released by the Commerce Department, consumer spending saw a modest increase of 0.3% compared to May, a month when spending remained unchanged. This report offers a detailed overview of how prices are fluctuating alongside insights into household income, spending habits, and savings trends. Notably, inflation also experienced a rise during this period. The Personal Consumption Expenditures (PCE) price index, which the Federal Reserve monitors to maintain its 2% inflation target, increased by 0.3% month over month, pushing the annual inflation rate up to 2.6%, the highest level recorded since February. While tariffs are beginning to exert a more significant influence on overall inflation, consumers, who account for more than 2/3 of economic activity, are generally managing to cope, as noted by Gus Fauscher, chief economist at the PNC Financial Services Group, in a CNN interview. "We are witnessing a gradual increase in consumer spending," Fauscher remarked. "The economy has certainly slowed down over the past year, with job growth and income growth both decelerating, which in turn is affecting the growth of consumer spending. Adding tariffs into the mix, along with the price hikes and the uncertainty they bring, has made consumers a bit more cautious," he added. Economists had anticipated a 0.3% rise in the PCE index, up from 0.2% in May, and an annual acceleration to 2.5% from the previously reported 2.3% increase. The annual inflation rate for May was revised upward to 2.4% in the latest report. When excluding the more volatile categories of energy and food, the core PCE index indicated that price increases gained momentum in June, rising by 0.3% from May, marking the fastest growth in 4 months, and maintaining an annual rate of 2.8%. The PCE price index was expected to see a slight uptick, partly due to rising gas prices, which had been on a downward trend for much of the year, as well as increased costs for goods as businesses pass on tariff-related expenses to consumers. This expectation was confirmed in the latest report. Energy prices surged by 0.9% after a 1% decline the previous month. Prices for goods increased by 0.4%, with durable goods rising by 0.5% and non-durable goods by 0.4%, marking the highest monthly increase since January, when prices rose following holiday discounts. These figures can fluctuate from month to month, and while I don't want to overanalyze every detail, it certainly suggests that tariff costs are being transferred to consumers. I believe we will see more of this trend in the coming months. President Donald Trump's trade policies, which involve extensive and often unpredictable tariffs on imported goods from various countries, are beginning to result in higher prices for consumers and increased inflation rates. Although the tariffs are initially paid by the companies importing the goods, these price hikes often ripple through the supply chain and are frequently passed on to consumers in some form. While the elevated tariffs are not expected to cause an inflationary spike similar to what Americans experienced in 2022, the resulting price increases will still pose challenges for many consumers, according to Vache. Consumers are likely to find this situation uncomfortable, he stated. They will start to notice that their paychecks are not stretching as far as they used to. Following the release of the latest spending and inflation data, stock futures remained relatively stable. Dow futures increased by 100 points, or 0.23%. S&P 500 futures rose by 0.92%, and NASDAQ 100 futures gained 1.33%. This report has been updated to include additional developments and context. Contributions to this report were made by CNN's John Telfigi.